America is no longer just split in two. It is accelerating on two completely separate economic tracks, and the difference is creating a disturbing new reality. Forget the simple narrative of a strong economy. What is really happening is a boom fueled by the ultra-wealthy, while the rest of the nation is locked in an escalating financial chokehold. The air you breathe, the roads you drive on, and even the discount stores you shop at are all operating within this billion-dollar split. This is the untold story of the American consumer, where one half is soaring on the wings of luxury and asset gains, and the other is just desperately praying to make the next rent payment. The shocking truth is that the elite's spending spree is being underwritten by a terrifying financial secret that is tearing the country apart. The moment you look at the raw data, the scale of this divide becomes chilling. According to a recent analysis from the Bank of America Institute, the top one-third of U.S. earners, those pulling in serious cash, have ramped up their spending by a robust 2.6% over the last year. That is a massive, confident investment into the market. But now, brace yourself for the other side of the ledger. The lowest third of earners, the backbone of the working class, could only manage a pitiful 0.6% increase. Think about that difference. A 2.6% increase means a new vacation, a fancy car, or a restaurant dinner. A 0.6% increase means almost nothing, effectively a desperate struggle to keep the lights on. This chasm is not an accident. It is the definitive sign of a financial system that has been completely optimized for the very rich. But where exactly is this mountain of elite money being deployed? The answer starts thousands of feet in the air. The travel industry is the clearest window into this luxury liftoff, becoming an undeniable status symbol for the financially privileged. Forget the cramped seats of economy class. That world is shrinking. Instead, focus on what the CEOs are saying. Ed Bastian, the head of Delta, recently gloated that their customer base is a high-end consumer, strong, with the means and the interest to fly. United's CEO Scott Kirby echoed this sentiment, shrugging off slow-down fears by saying that any bleeds on the lower end just mean more seats for their brand-loyal customers. They aren't worried about the average Joe. They're focused on the high-margin cabins. Delta's premium categories, the spacious Comfort Plus and the exclusive Delta One suites, saw their revenue spike by an unbelievable 9% in the quarter. This is not casual growth. This is a full-blown elite travel frenzy. Even the Federal Reserve's own beige book was forced to confirm this, noting that spending by higher-income individuals on luxury travel and accommodation was reportedly strong, while the vast majority of households are forced to hunt for discounts and promotions. The system is openly admitting that it caters to the top. Yet, the true scale of this privilege is only visible when you look at the price tag of a simple commute. The division is literally playing out on every highway in America, marked by the shocking $50,000 line. That is the new average transaction price for a new vehicle, an insurmountable barrier that shatters the hopes of middle and working-class families looking for a reliable ride. This record-high price point has been entirely created by the purchases of the wealthiest Americans. Auto industry experts have pinpointed that the surge is driven by wealthier households who have access to capital, good loan rates, and are propping up the higher end of the market. They aren't buying efficient family cars. They are splurging on status symbols, the imposing Cadillac Escalade or the gargantuan Ford F-150. These are not needs, they are statements. While a huge portion of the country worries about their 15-year-old vehicle failing inspection, the top tier is driving the average price up by adding six-figure luxury trucks to their driveways. But this spending gap isn't just about privilege, it's about an invisible injustice that starts with your paycheck. We need to talk about the hidden wage secret, because this is the primary engine of the crisis. It's the sheer imbalance of income growth that is tearing the economy in half. For the highest earners, the past year has delivered a healthy $4% increase in wages. That's enough to outpace inflation and feel genuinely richer. But for the lowest third of earners, the essential workers who keep the country running, their wages crept up by a barely noticeable 1.4%. When you realize that the real cost of living has surged far past that tiny 1.4% figure, the picture becomes horrifying. The lowest earners are, in real terms, getting significantly poorer every single day. This is a structural erosion of buying power, a financial vice grip that tightens month after month. The rich are gaining 4% of power, while the poor are losing 2% of ground. And the most powerful financial secret of all is why the wealthy can ignore their salary entirely. For the top tier, their wages are secondary. Their true financial superpower is the wealth accelerator. This is the deep, dark correlation between the rampant spending of the rich and the relentless rise of the stock market. The S&P 500 index has been soaring, delivering a massive 12% plus return over the last year. For high-income households, their financial life is tied to assets, stocks, retirement funds, investment property, so every market gain acts like a secret, massive, untaxed second paycheck. This is the wealth effect. The market's rise is literally funding their luxury travel and their new $50,000 truck. The bottom half of the country, which has no significant investment portfolio to tap into, has no such shield. They are forced to live solely on their inadequate 1.4% wage increase in a world of 12% stock gains. It is a system designed to make the rich exponentially wealthier, while the working class can only watch from the outside. This unbearable pressure is forcing strange new alliances, and the most bizarre one is playing out in the aisles of your neighborhood dollar store. The retail sector has been completely upended by the dollar store paradox. The CEO of PepsiCo has been forced to acknowledge that the lower-income cohort is very stretched and needs solutions for affordability. This desperation has sent them flocking to discount retailers for essentials. But in a shocking twist, Dollar Tree, the epitome of budget shopping, is now an essential destination for the wealthy, too. The company's new multi-price strategy, featuring items up to $3 to $5 and even higher, is explicitly designed to attract the higher-income shoppers trading down. Think about that image. The wealthy are hunting for deals on Dixie plates and cleaning supplies, not because they have to, but because they are calculating. They're trying to save a few $100s on everyday items to keep their expensive vacation plans intact. They're performing a strategic financial maneuver. The lower-income shopper is there out of crushing necessity. The higher-income shopper is there out of cold calculation. The dollar store is the bizarre meeting point for two completely different financial realities. This two-speed economy is a dangerous sign of the unsettling future. The high-end boom, the $50,000 cars, the exploding premium travel sector, it's all resting on the increasingly fragile spending confidence of a small fraction of the population, fueled by the volatile stock market. We are watching the working class get financially suffocated while the wealthy enjoy a private economic party. The system has become completely reliant on the prosperity of the elite. This leaves us with the terrifying conclusion. What happens when the elite's spending finally slows down? When their portfolios see a major correction? Will an impoverished, debt-ridden majority running on a pitiful 0.6% spending increase have the power to absorb that economic shock? The Great American Divide is not just a gap, it's a chasm, and it's accelerating toward a financial breaking point we might not be able to come back from.